Hey subscribers, welcome to Trading Capital's Daily Analysis video. Today we're going to be discussing natural gas and oil, the energy market. So natural gas bulls, wow, at the open today, natural gas was trading all the way down at a low of 258. It was down over 6.5% at the session lows. Now, what happened intraday was certainly impressive. Let me just flip to the natural gas chart. So here we are basically opening, selling. Oh, sorry, I'll scratch that. And here we are, we opened and sold. And then out of sheer nowhere, we had a V-shaped recovery. Nat Gas actually went positive. What an epic reversal. Now, why did Nat Gas go positive? Well, simply speaking, take a look at the area of support that we hit. We basically had this trend line, pivot to pivot to pivot. This is your failed breakout, retest failure, retest breakout consolidation. So this area, this trend line is a big area of support. And you can see you wicked off of it here and you've wicked off of it again. Now, most market participants are looking at this bullish reversal in Nat Gas and saying, okay, price action is ready to take off. It's ready to fly. It's ready to keep going higher and higher. But needless to say, despite Nat Gas having a massive reversal off of the lows and recapturing most of what it lost and actually going positive at some point, this is a bearish candle. Most Nat Gas bulls don't want to tell me that, but just this candle alone is called a daily hanging man candle. What makes it a daily hanging man candle is a very small body, a big reversal wick, but this reversal is not typically a bullish sign. Often price action trends lower after you get this candle formation. It also ended up making a new high in the session, but closing below the Friday high. So that's a little bit of a bearish signal that even with that epic reversal, there were still sellers that ended up closing it below Friday's high despite making a new intraday high. So I remain a little bit bearish in the short term. I do not hold a position in Nat Gas at this point in time, so I do think I'm giving a little bit of a unbiased opinion. We did exit our position for a nice gain with members, but overall I am expecting a little bit more downside in the natural gas market. And believe it or not, there's still a strong chance Nat Gas takes out these lows. Many people won't be wanting to hear that, but there is a strong chance. You heard it here first that if Nat Gas takes out this low, you were warned, and that's certainly what I'm expecting to come. It doesn't mean it's a short. I would never short Nat Gas down here, but maybe some intraday shorts I would certainly do, but definitely it's not a short. But I am not doing a long off of this level after it has had a nice impeccable bounce. Now, since I'm a little bit bearish, what would change my thesis to become bullish on Nat Gas? Well, if you chopped above this level, this pivot over here, 263, for maybe 1 or 2 weeks and put in a nice bullish consolidation pattern, that would potentially change my mind and mean that this has worked off a little bit of a near-term overbought situation and it could actually break higher. But I want to see some consolidation and I want to see it hold above this breakout trend line and this key pivot. If it can do that, then the bulls will remain slightly in control in the near term and could push it higher. Now, what got demolished today? Oil. Oil got absolutely bludgeoned. And what was really interesting about oil is that it had the backdrop, lower yields, lower dollar to trend higher, and it absolutely got bludgeoned. At one point, it was down over 5%. So a massive drop in the oil market. Now, technically speaking, what is oil doing? Well, it's still inside of its hammer reversal here. It potentially is still just carving out a right shoulder. As far as I'm concerned, oil's still making, here's your low, higher low, higher low. If you start taking out this higher low, then it becomes very bearish, but you're still forming a little bit of higher lows, and you could still be forming a left shoulder here, a head, and a right shoulder. This could be a big inverse head and shoulders. I still have it priced in. Oil has to tap the 76, and then if it breaks above outside of this inverse head and shoulders pattern, we could see a move all the way back up to $84. But you can see the selling is slowly starting to subside as the pattern had that ferocious down move, and now it's forming a little bit of a base. It's doing this curling. So you had your initial sell-off bounce, and then now you're starting to sell off, but you're starting to curve and potentially find a little bit of a near-term bottom. So definitely paying close attention to oil. I think one of the reasons the market had such an exuberant rally today in the SPY, in the Qs, is because it had a weak dollar, it had a weak yield environment, and it also had a very, very weak energy price. Natural gas was down at the lows early on, which sparked some exuberance, and then oil also getting creamed at the lows also sparked some magnificent exuberance. So definitely paying close attention to all of the energy markets as we progress, because they are certainly signaling something different to the tech equity markets. On that note, thank you all for being subscribers. I definitely want to encourage people to check out my tradingcapital.ca Discord. I run a swing trading and day trading service. If you're interested in how I'm trading nat gas and oil, there are some new trades that we just took today. Definitely give it a check out, and hopefully we can have you on board at TC. We'll be happy to help try to learn and earn together. On that note, take care, everybody. We'll see you on the charts tomorrow.